What's up everybody, this is Suleiman from SAZ. This is the channel where we talk about the money in business and the business of money. And today we'll be talking about passive income. So stay tuned till the end. So before we even go to the definition of passive income, I would like to tell you that on average, millionaires have 7 income streams. Now, these income streams, it doesn't actually mean that these people work 7 jobs. No, they might have one main job and maybe the rest of the 6 income streams are just passively generating them income. So what is passive income? Well, passive income is a form of an investment that keeps generating income even after the initial investment. Now, it might be a little bit complicated for us to understand at this stage what passive income is, but let's look at its polar opposite, which is active income. Active income is the income that is earned. Basically, you have to put in work in order for you to get that income. So for example, you have that 9-to-5 job whereby you go, you provide your skill and your time, and in exchange at the end of the month, you receive a check as your salary. That is active income. Now, passive income is that form of income that requires you initially to put in a little bit of effort, at times even a lot of effort, and then in return, you will be getting income passively, meaning that you don't have to actively work for it for a period of time. And when I say a period of time, it might be 6 months, 1 year, 5 years, 10 years, depending on that type of investment or that type of passive income. Now, for the purpose of this video and avoiding it to become too long, we'll only be looking at 4 main examples of passive income. The first one we'll be looking at is dividend paying stocks. The second one, rent. The third one, royalties. And lastly, we look at interest and capital appreciation. So let's start with dividend paying stocks. If you watched our previous video on investment, then you understand what we're talking about. But if you haven't watched it, we'll link it right here. And for the purpose of this video, let me just summarize it. Well, a dividend is kind of a payout that you're given when you decide to invest somewhere your money. Let me give you an example what a dividend is. So for example, there is a company out there, you've decided to buy the ownership rights of that company, which we call either buying shares or buying its stock, and it means that now you own a certain percentage of that particular company. Now, basic understanding of how companies work, at the end of the financial period, once they've made their money, the company can decide to do 3 main things. The first one is that they can keep the money for emergency purposes, so they are saving the money. The second thing they can do is that they can use that money and invest it in the same company for them to start now growing or grow even faster. And lastly, they can decide to take a portion of those profits and give it back to you, the shareholders of the company. So this is what we're calling the dividends. This is one of the examples where you can earn passive income, meaning that you just invest in that company, you don't actually manage the company or do the day-to-day activities of the company, but at the end of their financial year, then there is a portion of money that is sent to you just because you are one of the owners of the company. It must be noted that even though you get the dividends paid out to you, just know that it doesn't affect your initial investment in that company. The second thing that we'll be looking at is rent. Now, rent is actually the money that is paid to you if you have a tenant in your property. Now, rent becomes a passive income only if you don't actively manage that rental property. So if your tenants are calling you because the sewers are clogged, then this is an active income. It's not passive, because passive, you don't need to do anything. So what you can do is get an agent or even hire somebody who will be managing the property for you, and then this turns into a passive income for you. So it means that you'll be chilling, and at the end of the month you'll get a check deposited to your account. That is the rent that you got. Now, some of you might be thinking right now that I don't have enough money to start investing in real estate. Well, you can start investing in REITs. REIT, R-E-I-T, stands for Real Estate Investment Trusts. Well, this is a legal entity that is created. It pools the investment from different investors. So I can contribute 500, you might contribute 1,000, somebody else 5,000. And then it pulls all this investment into one big fund. It buys the rental property on our behalf. It manages that rental property on our behalf. And then when the revenue is being generated by that rental property, they deduct their service charge, and what is left is distributed to the investors that contributed that money. So in REITs, you can invest with as little as $100, $500, and you can start getting returns from your investment. The third thing that we'll be looking at is royalties. Now, in royalties, we need to understand there are two main participants when dealing with royalties. The first one is the licensor, and the second one is the licensee. Now, the licensor usually has something that the licensee would like to have or use. Now, the licensor will give the license, meaning that they give the right for that thing that they have to be used by the licensee. And in return, every time the licensee generates revenue, he gives a portion of those revenues to the licensor. Now, let me not bore you with all these jargons. Let me give you an example. So let's say you have this wonderful song that you produced. Everybody likes it. Marvel Studios comes to you and tells you that they would like to use your music in their next Avengers movies. Now, what will happen here is that you will give them the right to use that music, and in return, every time they generate sales or even revenues from that particular movie, there's a certain percentage that will be paid to you in terms of royalties. This is a passive source of income, meaning that you work hard producing that music. Once you've sold the rights to be used somewhere, every time it's being used there or it's generating money for them, you get paid. The last thing that we'll be looking at today is actually interest and capital appreciation. I'm linking these two things because usually they occur at the same time or in concurrence. Now, interest is that kind of charge that is added to a loan to facilitate that loan and make that loan less risky and worthwhile. So, for example, your friend comes to you and asks you for a loan of 1,000, and they want to use this 1,000 maybe to kickstart their business. Now, they tell you that after a year, they'll repay you 1,200. Now, the 200 is actually the interest, meaning that they have calculated their risks and everything, and they see fit to pay you 200 in return for keeping your money for a year. Now, if you loan people money, if it's permitted to you to do that, then you can actually be generating passive income because you actually don't work. The money is working for you. So you can give 10,000 here, 50,000 here, 200 here, and at the end of the year, they will generate some passive income for you and you'll get even more money. Now, on that other side where we're talking about capital appreciation, it is when your money grows just by being invested somewhere. Let me give you an example. If I decide to buy a piece of land somewhere and it costs 1,000 and I pay it in cash, I get the land, I have the deed, then 2 years down the line, the land value actually appreciates and it's no longer 1,000, it's now 1,100. So it means the value of the land increased by 100. And after the 2 years, my capital has actually appreciated. If I decide to sell this land, then I'll have gained 100 in passive income. Aside from these 4 examples that we've given here, there are a lot of examples of passive income that are out there. You can write books, you can write blogs, you can sell digital assets, you can formulate programs and even plans, or even develop something whereby people are paying you on a regular basis, such as a subscription service that you might offer them. So we have explained what passive income is. We have also given you some of the examples, right? Now, I must say that passive income is something that requires you to work hard, and at times even very hard, in the beginning and initial phase. This is your upfront investment, so that it starts paying you a certain degree of returns in the future. It's not easy for everybody, but if you manage to do it, then you will be one of those lucky ones. So if you are still tied down to your desk at your 9-to-5 job, it means that you only have one income stream. So you need to start thinking how you can increase your income streams. And if you have no time, it means that you can start investing in these kinds of passive income. So you'll still have your 9-to-5 job, but it means that at the end of the month, you have maybe 1 or 2 other income streams that earn you money. So for the question of the day, we want to know, do you earn passive income? If you found this video helpful, don't forget to like and subscribe if you haven't already, and don't forget to share with at least one person so that we can share the knowledge. And until the next time, build your future today.